Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Amex Exploration, traded on the TSXV under the ticker AMX, and on the OTCQX under the ticker AMXEF. And I'm joined today with the president and CEO of Amex Exploration, Victor Cantore. And Victor, it's great to get you on the show to introduce Amex Exploration. We've actually been waiting to do this for a while. I had a great sit down with your team at Beaver Creek in Colorado in September, and we just sat down, you and I and Wanda, in Fort Lauderdale, Florida last month, but I wanted to wait until the PEA, the Preliminary Economic Assessment, came out on your Perron project. Before we get into that, and we definitely will, I would like to back up and just give people listening in that are not familiar with the company and the project a little sense of how this project came together, how the company came together, and kind of take us through some of the historic work on the project.
Absolutely, and thanks for having me on your show. So this project has been in the company since the late 90s. So if I fast forward to 2013, there was a discovery hole that attracted Agnico Eagle. Agnico Eagle was on the project from 2013 to 2017. Myself, I got involved in the company in late 2016. So when Agnico Eagle didn't find what they were looking for, they left in the middle of 2017. And then we basically took all the work they did, we compiled it with their work, the work that was done in the past, and we made the discovery of the high grade zone in late 2018. And we've been drilling ever since. We've drilled, right now we're a little over 500,000 meters that we've drilled since then.
Yeah, I was impressed by just the sheer amount of drilling. 500,000 meters is a lot. There's a lot of companies that are parading around with only 50,000 meters already trying to jump into PEAs and things like that. So I do think some of it's the nature of the ore body being somewhat complex, so it requires some drilling, but it's also something where you put out a resource to the market earlier this year. And I want to dig into what came out on the resource. And then also, there was a little grumbling from people, Victor, that they thought there was going to be more. And the reality is there is more there. There's just some areas that you were mentioning to us off mic, just that they need tighter drill spacing to be able to bring them into the resources. So I guess walk us through what the resources are and then remind us of how much drilling you've done just even since the cutoff of those resources.
Absolutely. So the resource and the PA is based on, well, the PA is based on the resource that was released on September 5th, which is the resource cutoff date was on June 30th. So what we delivered was 1,639,000 ounces property wide. We were looking at around 4 grams per ton. When you look at the resource that's in the high grade zone is what really carries the balance of the project. You're looking at around 11 and a half grams per ton. What's really nice about that high grade zone is that it comes down pretty vertical. It's coming down around 89 degrees. And that's usually what mining engineers will tell you. That's their dream, is that it's a vertical body. So you bring in a ramp, and from there you're able to drift over to other deposits, but that's what you're looking for. Usually you want a vertical body when you have an underground mine. Now the market was expecting more ounces, and I know when we met at Beaver Creek, we had just released the resource, and what I did tell you there is that, and our along with our mining engineer, which he's just come from a project that was a $1.4 billion build. And what we told you there is that when we deliver the PA, we will show that this project can be a mine. It's not just something that, it's a small resource and we're going to go back and drill another 500,000 meters to show that this can be a mine. And I think that's what we delivered. I mean, we can go through the PA. The PA I think, was quite attractive. We used a gold price, assuming a gold price of US $2,000 per ounce. Using that number, it's a pretty attractive project. Using a life of mine of 10 years, you would end up producing around 100,000 ounces. We concentrated really the first 5 years where you would actually have 124,000 ounces a year. When you look at our AISC, which is the all-in sustaining cost, it's probably one of the lowest that you'll see in the industry. You're looking at $807 US per ounce. And actually, from year 1 to 5, it's actually at $739 per ounce. small capex, you're looking at 229 million dollars as a capex. And a good indicator there is you look at your after tax NPV and you multiply that by your initial capex, and usually you want to see at least two times, and that's what we have here. We have 2.3 times. If you're using the pre-tax, you're well over four times. And this the important part to look at here is it's just a resource and a PA at a point in time. That's just to show you that this someone can actually, with these kind of numbers, you can push the button and say, you know what, I'm going to move this over to development. And I think we did end up, delivering that. That is, this is can be an exceptionally profitable mine. One of the questions that were asked is how do we get to an AISC that costs? And I just want to remind everybody that this report comes from independent engineers. They're qualified people. They're completely independent to the company. The reason that we come in at $807 per ounce US over life of mine, it's really because of the high grade nature of the project, and not just the high grade nature of the project. The fact that it's right beside a town where there's an electrical substation. And now, again, when I say electricity, we're talking about a substation. I'm not talking about a 700 kV line that's crossing your property. And it'll still cost you $30 million to take that down. It's basically you already have an existing substation that's providing the electricity to the town, and it's about 4 kilometers to where we want to put in the ramp. And that's the same infrastructure that provides the electricity to Casa Berardi. Casa Berardi is owned by Hecla. It's just 60 kilometers to the north, and the town, which is right beside us. There's that. You have electricity, so you have roads right to the project. You have water. And another point that brings down the cost a lot is the fact that there's a workforce there. So you're right beside the town. That town has about 700 to 800 residents. That's definitely not enough to find 150 workers. But if you go 23 minutes south in the town of Lassar, that's a town between 10 to 12,000 residents, and they do no mining there. You're right in the middle of the Abitibi, which is like the second best endowed gold area in the world. And so those are the items that actually help bring down your AISC. Had the project been 50, 60 kilometers away from the town or away from infrastructure, well, that would definitely that would have substantially brought up the AISC. So that's where we're very fortunate where the project is located.
Yeah, I think it speaks to the strength of the infrastructure already in place there in the Abitibi, that there's a lot of skilled workers there. That is a very low all-in sustaining cost at 807, and then even the first 5 years it drops down to 739 because you have that higher throughput, that 124,000 ounces per year of production. Now, let me ask you, you've got a table in here that also shows some of the metal sensitivity. What jumps out to me is the base case that you used is $2,000 gold, but when you look at somewhere closer to spot near 2,600 gold, walk us through some of the figures there because they really pop off the page, Victor.
Absolutely. Yeah, those numbers are quite impressive. And just to show you on the low side, even at $1,500, it shows that the project is still profitable and quite profitable. Now, the minute you jump this to spot price, numbers end up getting the numbers end up getting substantially better. And also, even on the exchange rate, we've used a 1.35, even though the exchange rate is 1.39. Again, if I start looking at using spot price, you're looking at pre-tax, you're looking at the free cash flow, you're looking at a $2.2 billion over the life of the mine. Pre-tax NPV, you're looking at $1.6 billion. And after tax, if I go to after tax, the after tax cash flow, free cash flow is $1.2 billion. After tax NPV, you're at $914 million. So I understand that the market was probably looking for, 2.5, 3 million ounces, but we can show you that with 1.639 million ounces, it's a very profitable project.
Absolutely. I think it's nice to wrap some economics around the project now, the Perron project. But let's talk about the upside for exploration because you have not stopped drilling, even though you cut off drilling in June. I think you've drilled another 28,000 meters since then. So talk to us about the exploration upside, some of the targets the team is excited about. You just put out some news recently that highlighted a few different targets where you had some drill success. So give us a sense of how the project is continuing to grow.
Absolutely. Now that we've shown that this can be a mine, now our goal is to grow this mine as much as possible. And yes, we did drill at least 28,000 meters that have not gone into that came in after the cutoff of June 30th. So In all the known zones now, it's basically the mining engineers that are guiding the drilling. So in areas now that you have a block model, you have the stope shapes. So there's gaps in those stope shapes, and the gaps, most of those gaps is not because of low grade. It's mainly from a lack of drilling in some of those stopes. So most of the results that we've been showing recently, it's basically going right through those gaps. So that's going to increase the economic ounces in the project, but it doesn't just stop there. The geologists are also looking at expanding and making new discoveries on the project. When you look at where we found most of the gold, it's along the northern fault line, the southern fault line. So northern fault line is the Normantal fault. The southern one is called the Perron fault. There's well over 20 kilometers of prospective faults along there between those two faults. Plus, there's a bunch of secondary ones in the middle of there. And also on the southern part of our project, which you can find that on page 10 of our corporate presentation. There's the south block, which is the volcanics. That's usually where you find most of the gold. We haven't put one drill hole there looking for gold. The reason being is because we really concentrated our drilling inside the Eastern Gold Zone to show that we can actually create a mine out of that. But now it's going to be working a way to expanding the resource as much as we can. That's going to be really our work going forward. Also, the other part where we're continuing forward is, keep looking out for announcements that we're going to be de-risking the project. De-risking the project in the sense of permitting and environmental. We're working with permitting people, and they're giving us their checklist. And as we hand out the contracts, we're going to be announcing those along with further discoveries and further success on drill holes.
Well, just digging into it just a little bit further, I'll put a map underneath us from that page 10 of your corporate slide deck so that people listening can follow along with some of these targets. But just the recent drilling that you put out on November the 6th highlighted areas like the central polymetallic zone, the high grade zone, it's on there as HGZ, the team zone and the JT zone. When I was at some of the recent meetings with your team, they were very excited about the team zone, the JT zone, but they also were pointing to just a little bit further over maybe a new area, and you'll see some numbers that are not listed on the map that are not named, but the 7, 8, and 9 area, they think there's maybe a parallel trend over there. So maybe walk us through not just the success they've had at some of those targets, but just that there could be another parallel structure that they're going to be following up on.
Oh, absolutely. Like the latest one that we had on the CPZ zone, it's actually between the Gray Cat zone and the CPZ zone. That's really interesting because that's an area that we had not gone back to drill in quite some time. So we're really looking forward to that. There's also in the middle of that structure what we call the sodic rhyolite. It's actually where it's the peach colored. Right in between, there's an area that's called it's an area in the middle. It's called the N110 zone. That hasn't seen drilling for many years. Again, the reason being is that we actually were concentrating in one area to show that, look, we can turn this into a mine, and now we're going to expand it. So we're really excited as this drill program goes forward. Like, I mean, we're really excited even with the numbers that we delivered. Even if you wouldn't find one more ounce, you can actually put this into production. It's a very profitable mine, what you would end up with this.
Yeah, I think right now the PEA shows it stands on its own 2 feet as it is, but a lot of people, as you know, Victor, want to know that there's that blue sky upside. So when I asked you about how many meters you think you would drill or what the next phase of drilling is, your answer to me was that you're just going to drill 24/7, that the drills don't stop and that you're going to keep drilling. So maybe give people a sense of how much drilling will be going on through year end. And then as you round out the year, into next year, what do you have on slate as a rough idea for how many meters your team will continue to drill?
Yeah, every year for the last 4 years now, we've been drilling anywhere between 80,000 to 100,000 meters. But I think more or less we should be doing that every year until we expand it much more. So, like I said, there's two drills on the project right now, turning 24/7. We're doing all the compilation now on the project with all the information that we had, and then we're gonna advance this in 2025. I really want to move forward as fast as possible. Again, this will depend on the success of drilling. I would love to deliver another PA with a resource sometime in later on in 2025, and that's going to be very exciting, expanding this resource.
Okay, I was going to ask you that if you're going to put out an updated resource. So maybe towards the end of next year, you update the resource, update the economics. Let's also dive into the team behind Amex Exploration. I've met about four members of the team already, and I've been impressed with all of them. But maybe just give us, one or two key people on the management team and one or two people on the board that you'd like to highlight, Victor, and also your background in the industry.
Yeah, absolutely. So if I'll go with Jacques Trottier, which is on our board, he's an economic geologist. This is his third mine that he's actually was part of the discovery. Then there's Aaron Stone. He's our VP exploration. He worked on the project back in 2020, and we hired him. It's about a year now that he's been working with us full time. And we also needed help on since we're moving forward with development of the project. We wanted a mining engineer to work with us. So Jonathan Gagne stayed with the Greenstone mine, which is owned by Equinox. It's just on the other side of the Quebec border. It's in Ontario. And again, like he was part of a team that put together a $1.4 billion build. A $230 million mine is not going to say it's easy, but it's, when you've seen something at 1.4 billion, I'm sure he's going to be pounding at the table that, this one's possible and it's quite easy at $230 million. And this is $230 million Canadian to get this up and running.
Well, and Victor, also share your background in the industry.
Yeah, absolutely. I was an investment advisor with RBC Dominion Securities in the back in the 90s. I've been part of other successful deals, including Nemaska Lithium. I was there from the beginning until it went to we had almost went to $1 billion market cap. I was not part of management. That was actually my property. I sold it to them and stayed with them till about 2019. And that's what I like to do is take projects that have what we say a lot of meat around the bone and try to make them as big as possible. And I think we have the right team. We have good players here to move this forward.
Well, and let's also pivot over to the financial health of the company, the share structure, and also that you have a key strategic shareholder in Eldorado Gold. So maybe put a little color around that relationship, but also just the financial health of the company.
Absolutely. So presently we're sitting with very close to $20 million. We're looking at around 12 or $13 million in flow through, and the balance is in hard dollars. I mean, financial health with two drills, we have more than enough money to keep going until the end of next year. And so the other part is also with Eldorado. They're really a great partner. They first invested money with us in February of 2024. They also participated in the last financing that we did to maintain their position at 9.9%. They were actually very happy with the resource, and they're a great partner. We have a technical committee with them. There is a total of 5 members on it, two from them, two from us, plus we chair it. And having a partner like that is very important for us. They actually do help us in those technical committee meetings. So we have a great relationship with them so far. You also have Eric Sprott that participated in the last financing also. He actually increased his position to over 12%. So I mean, we have good, happy shareholders right now.
Well, and I should disclose that I'm also a shareholder of Amex Exploration while we're talking about it. So I'm biased in that sense. But let me also ask you, as we roll into the first half of 2025, what are some of the key corporate objectives and key milestones that you want investors to look out for as the news comes out over the next, let's say, 6 months?
Absolutely. So what to look out for is really drilling results. You'll see with drills turning 24/7, there will be a good news flow on drilling results. It will just continuously keep putting out drilling results. You'll be able to see we're de-risking the project by moving forward with permitting slash environmental work that needs to be done, like all the baseline work, all the work that takes more time. And again, this is all funded. That's one of the reasons we did the hard dollar financing, environmental slash permitting work. That all gets done with hard dollars, and we have more than enough to continue the work in that space. So, what I would tell everybody is just keep looking out for news on drilling news and for permitting news. There's a lot of news that's going to continue coming out with the drills turning 24/7.
All right. Well, we'll wrap it up there, Victor. But great to have you on the show and introduce officially Amex Exploration to our audience. And we'll keep following along with it here at the KE Report. And for those listening in, if you want to follow along with the news, definitely click on the link below this interview. it takes you right over to the Amex Exploration website, straight to their news section where you can sign up for updates. And you too can follow along as more drill results and permitting information is released to the marketplace. Victor, keep us posted as you get more news out. We'll get you back on for an update and looking forward to our next conversation.
Great. Looking forward to it.